Hello everybody, it's Shane Catchpole here from Into Profits, and today we're going to go through a client success story and how we increased our client subscribe and save growth rate by up to 80% or by 80%. So I'm going to go through the slides I prepared here. What you will get from this is some of the techniques we use to grow the subscribe and save numbers faster after an out of stock. So without further ado, let's dig in. So let me just press play on this. So yeah, how we increased our client subscribe and save 80% faster. I'm going to need to move this mic or this thing out of the way, make it a bit smaller there. Okay, so Amazon advertising is not like it was 10 years ago, even 5 years ago. I think we all know that. Bids have increased, competition has grown, but this is just down to the fact that there's a huge amount of volume on Amazon. So this is a good thing as far as validating the volume. What it means is to stay ahead of the competition, you need to stay 2 or 3 steps ahead, and this is the way that we've done it across all of our client accounts and how you should do it to stay ahead of the pack. So as it says here, I'll show you how to stay ahead of the pack, secure predictable profits, also add equity valuation to your company as well. So let me click here. So this is a particular problem in subscribe and save markets, the bids and the competition. In markets such as pet supplements, where lifetime value is high. It pushes the bids incredibly high and makes a barrier to entry for new market entrants. So this is good if you're already in the market, but there's a couple of key things that you need to do if you are in subscribe and save markets, particularly those that are very competitive. I have seen bids $20 and over per click in subscribe and save markets, and I don't expect they're going to come down anytime soon. What it means is if you can get in a position whereby you've got a great amount of subscribe and savers, you're delivering a great product, you will have secured your business's long-term success for many years, which is obviously huge. And more than that, you will also have a huge valuation for your company, because what the aggregators like to see, having spoken to many of them, is they like seeing repeat customers. One-time customers are good, repeat customers are a hell of a lot better, at least for exits and equity valuation. Okay, so let's have a look here. So in one case, our client in food and beverage selling across Europe went out of stock of their top products and lost 12% of their subscribers in weeks. So over 165 subscribers dropped off, which is obviously really bad considering how long it can take to build up subscribers. So this is one where we had to put our thinking hats on and into profits. And we met on our weekly ads council to devise a strategy to help Ben bounce back from his big loss. So given that we were presented with a situation whereby we'd lost lots of subs, we thought it best to devise out a strategy and see how we can basically get that back. So what we figured out, so the lifetime value of your customer has a massive impact on the multiplier you receive when exiting your business. So this I know, you'll get a much higher multiplier if you have repeat customers, so that's obvious. So the strategy we devised on our ads council is after the ad squad we assigned to our partner provided context, we decided that an aggressive approach post restock would be the best to supercharge subs again. Yes, supercharge acquiring subs again. This would involve increasing bids on our tiered system. So having here, did you know? So the tiered system in a nutshell is being able to segment your keywords by type, given that in many cases 20% of your search terms make up 80% of your sales. We see this in all industries on Amazon. It can vary slightly, but by and large that is the case. So being able to segment those targets based on the tiers is very important. So we have a tiered system we use and this is what that is. I will create a separate video going into that in a lot more detail if people are interested, because we have got record sales in many accounts using this tiered system. Let us continue here though. So leveraging the SDA retargeting periods also based on the time to consume of each F&B product that went out of stock. Yes, so alongside a tiered system, also making sure that you have your retargeting periods on SDA. I do see in a lot of audits, many people do not have SDA set up. This is obviously a big, this is obviously not good because you're missing out on a lot of sales. SDA VCPM in particularly can be extremely profitable. I see it in many accounts even when average ACOSs in other brand types are 30-40%. I see VCPM sometimes at 3%, 5%, 7%. So always the case with Amazon when a new feature comes out, being able to utilize it at the start is when you get the most low-hanging fruit and the most fucking profit for businesses, so to speak. So furthermore on that, if something was due to last 60 days or a few missed days, we knew that the 60-day retargeting and the 90-day retargeting would be critical. If something was due to last 30 days, then we'd look at a 30-day retargeting and 60-day retargeting. So the idea is to target customers who have made one-time purchases and are running low, targeting them around the time they need to reorder. If it's a 30-day supply, targeting them 360 days is not going to yield good results. So we see better returns if you target around the time that it's due to expect, or due to run out. As you know, when you have products, when you see something getting low, sometimes you forget to reorder. That's what these ads are for, really capturing that moment to run ads to target the customers. Now I just want to add another thing here as well, as far as the aggressive approach and the tiered system, because I didn't go into it in a huge amount of detail. But the idea behind the tiered system and segmenting the terms is you've got to look at, if we're going to go aggressive in this strategy, which we did, you've got to look at the terms themselves. For example, the top terms that make most of the sales, of course, that's great. But in some products, their top terms are gift. So they have, let's say, the term gift in the search term. And if that is the case, obviously, if you want to increase subs, leveraging up on terms such as gifts is not going to yield the results you want from leveraging up on different types of terms, because gifts are generally a one-time purchase. Well, unless there is a case that someone wants to reorder on a subscribe and save gifts every couple of months, I don't fucking think so. But yes, so segmenting them based on that can be helpful. Okay, so conditions for subs aggression, because it's very, maybe carte blanche to just say increase the aggression. What does that really mean? Can you do that in every account? Not every account, no. So we can only make this strategy due to our efficient ad spend at this point. We're running a 7.6% TACoS and optimized tiered systems, so at the ability to adjust up and down this TACoS as we desired, because it gives us a lot of flexibility with this setup. So we talked to the client and proposed a TACoS of 12.5%. With this strategy, with an allowance of 2.5% variance, should run up to 15% if we're getting great results. So just leaving a little bit extra on so that we can allocate more capital if indeed we're getting really good results, particularly around the subscribers, which is obviously what we were looking to do. So there is one thing I want to mention as well, and I don't think it's in this, it's not in this, and that is we talked about the bids and subscribe and save markets, or just markets where there's a lot of lifetime value. You know, it might not be subscribe, but there might be lifetime value around the ecosystem of products. So getting that first acquisition is a lot more valuable because they're going to buy other products in your brand, as opposed to a really one-time. For example, if you're selling like a scissors, maybe it's going to be a one-time purchase. People might buy new scissors once every few years, versus if you're selling something else that has a variety of styles or colors or replenishable. This is where the bids can get out of control, because the auction gets higher, because it's actually a lot more valuable for the sellers in that market to have or to bid high, because they're going to make a profit anyway. They might order that once a month for 12 months. So that's why the bids get higher. And this is why we suggest to our clients, given that we focus in on subscribe and save clientele in a lot of cases, that makes up a big portion of our client base, is that we tell them to increase the aggression now, because quite simply, if they want to drive equity value, if they want to drive valuation for their company, the bids are going to be a lot cheaper now than next year and the year after that and the year after that. So working on their or tuning up the aggression, getting those subs now is going to pay off long term, particularly again if you want to drive valuation. So getting the conversion rates right, getting the visibility right, getting the SEO right, and then really capturing those sales, those first touch points in an efficient manner, increasing subs, and everyone is happy. So our clients can get big exits. Okay, so the tools used for this, we use into scale. So we do have an internal tool that we've built, that we've developed. We do use that for our ads agency clients only. It is not publicly available. The other one we have is the SDR analysis collator. So again, we use this to collate the tiers, to analyze the tiers. We look at obviously the search terms, the click-through rates, we look at the conversion rates, we look at the ACOS, we look at the visibility, we rank them, we splice the data, we bring it together in our tiered, this little fella is getting a bit crazy. We bring it together in our tiered systems across sponsor products, sponsor brands, and SDA, and we use SDR collator tool for that. The final one is obviously just the Seller Central subs dashboard, and as it says at the bottom, we're old school. Yeah, we do have tools, but no AI tools, and we have just experience and craft and systems that we put to work on our clients' accounts. So within 8 weeks, subs were growing at 3.3% per month. So prior to that, they were growing at 2.4%. So we already were seeing an increase in the growth rate in the first couple of months. The subs monthly sales crossed a record $15,000 in a single month, touching 25% of overall sales that month. So this was a record, which is great. Within 4 months, subs grew by over 300. They grew 80% faster than in the months before the stock out. Before the out of stock, subs grew at 2.4% each month, or about 19 subs. Post out of stock, subs grew at 4.3%, or 49 subs per month. So massive increase here, and we were delighted to see that. So just some data here around the results. So you can see the growth rate pre out of stock, how it was growing, a couple in the 40s, some not so good, and then post out of stock, we did exclude obviously the minus months, or the out of stock months. Post out of stock, we really start to see a ramp up. So we see month one not huge, 21, but we do see 59, 60, 79, 43, which is just about as high as the highest months in the previous 4, and then we're even up at a 68 as well. So we can see in the chart the growth rate percentage here, and the subs went down to 1189. They now went up to 1500, over 1500, and I already know, having looked at the data, they've also smashed this thing on way over 1600 in the months following that as well. So we are really happy, the client is really happy with this, and very effective. So long term, ACOS remained low, which is a sign of targeting the correct terms with aggression, not just all terms. So yes, obviously we talked about aggression. Now, we had set what's the right word? A ceiling on the tacos. If we're looking at this as investment, we do not want to go past our clients' restraints or make it uncomfortable. So we did keep within a certain amount of tacos. But what we see, and because we had the terms and our advertising tiered, we were able to specifically target those terms that were likely to increase the subscribers, so excluding, as I said, some of the gift ones and so on. And that really paid off, because we seen ACOS stay low, which meant or at least gave us a sign that we're targeting the right terms. So we also lowered the tacos range potential due to the increase in subs, bringing in more free sales. So yes, second consequence of increasing the subscribers is that the tacos can also go lower than it was before. So we've seen a 7.6, 7.8. We've got an even bigger percentage of those sales now coming free. So it means when we now turn down the levers on those ads, profit is going to be flowing, and we've got that potential there to do that. Now we are still pushing aggression, because as we said, we're seeing great results still in the subscribe and save aggression. So we achieved an all-time high in subs, over 1,500, and yes, they continue to skyrocket post this period. Also very happy to see that. Okay, so I hope this was really helpful to you. To see if we can achieve similar results for you, just apply for a free audit. So the link is in the description below. That's all from me, guys. I want to wrap it on 15 minutes. I hope this is helpful. Have a great day, and bye for now.